market experts to share with us their views and their thoughts about the key issues which we as practicing bankers keep grappling on day-to-day basis. And today, what we are going to be talking about is about financial crimes and trade-based money laundering. As you all would know, that financial crime over the last few years has become a subject of major concern for corporates and governments as well throughout the world. And this concern is arising from a variety of issues because the impact of financial crimes, as many of us may not realize, can have a negative impact on various aspects of life, including the reputation, credibility of the firms, and also the revenue for the firms. It has got economic as well as social implications. And the prevalence of financial crime can impact the growth of economies and also impact the stability. This is generally referred to in two essentially different, though closely related types of conduct. The first, which we are all very familiar with, is the kind of dishonestly generate wealth for those engaged in the conduct, something like bribery, corruption, fraud, or the latest thing which is there now being talked about is about the cyber crime as well. Second aspect of financial crime is the one that doesn't involve the dishonest ways of taking off a benefit, but is aimed at more protecting the benefit, protecting the wealth that has already been obtained by using these kind of dishonest or illegal means. What we call it that illegal financial flows or illegal wealth which has been accumulated, how to protect, how to safeguard that, and how to convert that into maybe seemingly legally obtained wealth. That is what we call the money laundering, where someone attempts to launder the criminal proceeds to another offense in order to place the proceeds beyond the reach of the law. And that is exactly the topic which we are going to be talking about today. And to help us understand this topic better and also to figure out the intricacies of this, how it affects us in the banking world, in the financial world, we have got today with us Mr. Charan Rawat, who's a seasoned senior banking professional with over 34 years of experience across all areas of banking. And the last 18 years, Charan, if I'm not mistaken, is in the world of compliance function. And he's an
Yeah,
accomplished
I'll,
account.
I'll, I'll boast a little bit. It's not 20, it's not 18, it's 23 now.
Oh wow, that makes it even more awesome. And Charan has been
Thank
working
you.
in various functions across different banks, as he also worked as chief governance officer in Barclays, and currently is head of compliance at Cooperative Bank, which Cooperative Rabobank, which normally we call it the Rabobank. That's the easier to pronounce, easier to remember. And
Indeed.
he's also a graduate and postgraduate in law, and currently, if I'm not mistaken, pursuing a doctorate also from Symbiosis International University. So you are a live
Yes,
example of
indeed,
same
indeed.
for somebody when we say that learning never stops. We keep learning, keep growing. So even today, if you are pursuing these kind of academic pursuits, that's hats off to you. I really wonder maybe sometime in person we'll meet and I'll ask you how do you spare time between your family life, professional life, and all this. So coming to the today's discussion, what I would like to begin with, Charan, maybe we all keep hearing about these terms, the financial crime, money laundering, trade-based money laundering. If you can just start from the very beginning, exactly trying to explain, help all our participants get a better understanding. What exactly is money laundering? Why is it so important? How is it done? And then something which keeps coming, somebody else has got illegal money, he's trying to do some with that, with something with that. Is it, if it is going through my channel, why as a banker I should be concerned about it? Is it illegal for me to be participating knowingly or unknowingly into these kind of activities? Something about that. Very often we see that if I'm banker, I'm being used as a conduit unknowingly. Why should I be worried about? Why should it be my fault or my flaw? It is somebody else's money. So if you can just talk about what is money laundering, why it so much concerning, how is it done, and why as a banker I should be concerned about it. Over to you, Charan.
Well, thanks, Ashwini. Thanks. First and foremost, would like to thank Vidai for giving me a chance to address the friends and colleagues across the industry.
No, pleasure is
Coming back
completely yours.
to, no, thank you, honored. So coming back to the question that you mentioned, money laundering, and I would possibly fall back on where you started as to what is money laundering, in the sense that am I trying to use my ill-gotten wealth to make it legitimate. Now, if we just go back in history and if you were to look where the money laundering start, I think it's very interesting history as to how the word money laundering itself came into being. I'm sure many of you would have seen this old movie about El Capone, the American gangster, who was a very famous gangster during the time of abolition era in United States. Now, it was a public knowledge that he was engaged into bootlegging, he was engaged into prostitution, in controlling the labor unions, running illegal betting dens, but nobody could ever find out as to where his money was coming in from or going. So it was one of what you would call an apocryphal story that, oh yes, he's a big gangster and he runs all these brothels and bootlegging businesses, but where is his money? And those of you who may have seen this movie called Untouchable, they would have possibly realized that his accountant had actually bought a whole host of laundrettes. You know, those small shops which would wash your clothes. And these were the laundrettes which are always accepting only cash, even way back then. So now there is no limit as to how much of cash can be collected at a normal shop. So these shops were being used to bring in money and deposit in the banking system, whatever banking system prevailed then. And because the money was coming in through these laundrettes, the word money laundering got into play, that here was the dirty money coming in from the prostitution or gambling dens or bootlegging, and it went through the laundrettes owned by the front men of El Capone, and the money has become clean. Coming back to the more recent times, while the FATF and the government bodies really came up in the beginning, the focus really was on how do we combat the drug menace, basically. Way back in 1990s, the idea really was that can we control the flow of money related to the drug trafficking? And it's only later on, particularly after the 9/11 in 2001, is when the whole debate about how the money laundering is affecting, as you rightly said in the beginning, how it's affecting society, how is it affecting social and political economic life. That's where the FATF's ambit really widened in a big manner. So the way I would look at it, money laundering, it affects us in two manners. If we are giving a legitimate option to the criminals who have generated this money, and once that money comes into the legitimate sources, it acquires the shape of a legitimate money, it can be deployed in the formal economy. So if, to put it, give a real life example, let's say we are talking of a bootlegger. Obviously, it's an illegal money and nobody can say that I'm doing a bootlegging business. But how does he enjoy the fruits of that activity? That money has to flow into the system in some manner or form. It enters into the banking, as we all know, through those multiple layers of layering, smurfing, fronting, or mules. But once money has come into the banking system and it flows through accounts, and then one fine day we have this gentleman buying some properties or making some investments or doing some legitimate businesses. Now that's how I really look at uh, the money laundering. Now the question that you asked again was, should I be bothered about as a bank? I think when we look back, this whole chain that happened uh, when FATF came into being and when 9/11 happened, what was realized that banks are the gatekeepers of financial system. While the law enforcement agencies can take all action to go after the criminals and the criminal nexus, but how do you control the flow of the money into the system? And until and unless people who are controlling the flow of the money into the system, which is the banks, or people into the financial system, whether it's brokerages, whether it's insurance business, or whether it's commodity broking, commodity trading activities, until and unless the flow of the money is controlled, or somebody acts as a gatekeeper, as a filter of the money coming in, you cannot reduce the extent of money laundering in the system. Now, governments and law enforcement authorities having placed that kind of a faith and responsibility on the banks, the converse of that is that if I have failed into my duties in delivering onto those expectations, our experience shows governments have held banks accountable to it. That massive penalties which have been imposed on the banks, whether it is for not doing proper KYC, whether it's not doing transaction monitoring, whether breaching sanctions directly or indirectly, the expectation has been that, okay, here's the government's policy, here are the UN sanctions, etc., which need to be enforced by people outside of the government, which is where the banking system comes into play.
Okay. Thank you.
I know I've been a little
Yeah. No,
elaborate onto
that's
this, but I don't know whether I addressed the question adequately.
yes. That's you had raised. Just maybe if I can say, so this is practically what you are explaining is a predicate offense. Somebody else has already committed the offense, and it's a subsequent to that where we are getting sucked into it, and
Absolutely.
government has got certain expectations, and we have got certain role to play in that. So, and if I may, you mentioned about FATF, the Financial Action Task Force, the Global Money Laundering and Terrorist Financing Watchdog. That's what
Right.
we call it. The institution normally that sets the international
Correct.
standards to prevent the illegal activities in the economic and financial channels of a country. And now FATF, as far as I know, recognizes trade-based money laundering as a huge concern and calls it one of the world's three largest money laundering methodologies. There are various ways how the money can be laundered. Then trade-based money laundering is one of the three key component, three largest technology which is being used. And I read somewhere else also that TBML is a big business which is undertaken, run by the internationally organized, it's a sort of internationally well structured, well organized machinery of criminal syndicates which undertake these kind of activities. And I would request you to just give a little bit more insight into it. What exactly is this trade based money laundering? How is it linked to the big picture, which primarily concerns terrorist financing or smuggling of illicit or illegal goods? We know that's the primary offense. And now there's the predicate offense, as I mentioned. And we all keep hearing the term TBML, which has become a buzzword nowadays. But very often we get confused with this. What exactly is TBML, trade based money laundering, and how does it infiltrate into the banking channels?
So let me venture gingerly into this area. I think if the money laundering is the primary intent of any criminal or try to launder the money which has been obtained through the illegitimate means or illegal means, or as you said rightly, a predicate crime has been committed, and now intent is how do we legitimize that money? It's the use of the international, primarily international trade finance or the trade, global trade, to legitimize the ill-gotten riches. I will also try to quote exactly how FATF defines it. The FATF in 2006 actually defined the trade-based money laundering as a process of disguising proceeds of crime and moving value through use of trade transactions. Now, we all know money laundering is disguising the proceeds of crime, absolutely no doubt about that. But it's the use of the trade transaction to move the value. So the whole intent is that between two jurisdictions, the people engaged, the people involved are not interested in moving the goods, which we would generally say for an import and export. There's a legitimate motivation and incentive for two people to either import something or export something and exchange value for that. But in case of a trade-based money laundering, the intent and the motivation is how do I move the money in or out of a particular jurisdiction. So if, let's say, hypothetically, the gold has been smuggled into India from any jurisdiction, the money has to be paid, has to be sent there. Now, how do you send that money? So it's basically using the route of a trade, international trade, through which you are moving the money. Particularly in Indian context, Ashwini, if I might just try to take further liberty with definition of FATF, given that we are a country with fairly rigid exchange controls, I would also go to the extent of saying that where attempts are being made to move capital in or out of the country, irrespective of whether it is legitimately obtained or illegitimately obtained. So while the purpose of money laundering certainly is to get the illegally obtained money into the legitimate system, but we are all aware of many cases where attempts are being made to get the capital out, whether the money has come through banking loan or your own resources, but you would like to break the exchange control laws. So particularly in Indian context, I would like to widen the definition of TBML as to not only get the illegally obtained money across jurisdictions, but even sometimes legitimate money, but you would like to take it out in a manner that does not attract attention of the regulators or the law enforcement authorities.
Maybe does it fall in the
So that's
realm of
part one. Now,
tax evasion and other things? That's what probably it comes into then.
tax evasion would be one, but possibly in this case, what would happen is the action would lead to a criminality rather than the money leading to the criminality. So, for example, we all know as an individual, I can move $250,000 under liberalized remittance scheme. But if I would like to move $1 million, how do I do that? I may have had that money somehow legitimately earned through my investments or my savings or whatever it is. But I would, if I'm trying to break the law, particularly in Indian context, that's what I just said. That it's not only the illegitimate money, but people have resorted to trade-based approach to move the capital around the globe. Now, we
Right.
can certainly say that there are companies, for example, there are cases going on, as you would have read, where companies have done over invoicing, under invoicing to move the monies around, even though the monies were raised through the bank loans. So the money has been absolutely legitimate, but it's the intent, because you want to siphon off, you want to move the capital out of the country or out of the company, which renders this in the region of that you have played a fraud on the bankers or on the government of India, as the case may be. Again, how the trade-based money laundering happens, multiple studies, multiple reports being put out by whether it is World Economic Forum, whether it's by FATF or by AMLGP. It's primarily the three routes, which is the under invoicing, over invoicing, it's the phantom shipping, and then of course there have been cash couriers. Now, multiple routes around it, multiple structuring, multiple designing, whether it's a direct transaction between, say, India and Dubai, or whether it's happening via multiple jurisdictions, that's just structuring around how the capital moves around, the value moves around between different jurisdictions. So, as bankers who are handling trade finance, this becomes even more critical because, as we all know, 80% of the global trade today is happening on an open account trading basis, which means the so-called import export has already taken place without documents having gone through the bank. A banker would come to know of it only when the money is hitting the account, which makes the responsibility and life of banker even more difficult, because then you are coming in post facto after the money movement has taken place or is about to take place. Over to you, Ashwini.
So practically what you're saying in Indian context, the scope can be much wider. It's not necessarily the illegitimately obtained money. It may be the legal funds also, because of the capital constraints, people try to move it across borders. So that makes it even more complicated. So I still,
Absolutely.
maybe the earlier time was much better when the villain used to run around with a sack full, or maybe the suitcase full of the currency notes, and then nowadays I realized that you were
True.
mentioning about various international bodies. That reminds me of Global Financial Integrity Survey, and if I'm not mistaken over there,
Correct.
one of the estimate they had said that there is a potential trade misinvoicing. They collected the data from around 130 odd countries, and the estimate said that there's a potential trade misinvoicing of around $1.6 trillion. Basically, I'm exporting X and the other country for the same trade is showing X minus something. So somewhere in between the funds are moving somewhere else. It's no
Correct.
longer trade. The trade piece invoicing, when you compare the data between two countries, there is such a huge mismatch. And the what was quite disturbing, the report also mentioned that India figures in the top five for these kind of illegal financial flows. If I may say, they use the term illegal financial flows, which is maybe, as you said, maybe the legally obtained money, but being remitted, being sent out illegally. That's it. So instead of taking the money in a suitcase or sending it through maybe the dinghy through the sea going over there, and what makes TBML the preferred route? Why people are moving towards this? Why this has become over a period of time the much preferred route for the money laundering? What are the pits and falls? What are the key features which makes it so attractive for the people, putting we bankers at risk?
So I think the GFI report that you referred to, it's an eye opener, and I would say that just about all our colleagues in the industry must at least go through that, have an idea. And what you mentioned about the numbers, $1.6 trillion is something that they're spoken about as a global mismatch. Even among the 134 countries, the developing countries that they're talking about, and that's where the bulk of the activities are taking, they have had a mismatch of about $835 billion. So the $1.6 billion is a mismatch of these 134 countries globally, but these 134 countries also have a $835 billion mismatch with 36 developing economies. Now that comes to developed economies, and that actually is a cause of concern if you were to ask me, given that if nearly about 800 billion in India and US or China and US or China and Canada, and US, Canada, UK, Germany, etc., being recognized as the developed economies, it just indicates that problem is not only at relatively, pardon me using that word, relatively backward or less law enforcing countries in developing world, but the problem is equally rampant in the developed economies as well. The second part that really comes up as to why trade is a popular means of doing it. My personal take is the very process that was created to make trade safe, as in the nature of documentation, the supporting documentation and authentications, etc. That itself has created potential loopholes for people to violate. Now, just look at the number of people involved in any transaction. You got a manufacturer, you got a trader, you got a transporting company, you got a surveyor, you got a shipping company, you got a custom agent. Then again, somebody certifies your goods. At every stage, there's a potential for misinvoicing, mispricing, inflating the cost, changing the documents, changing the quality reports. And so I'll give out an example from a particular case which is sub judice. And so obviously, I can't use the names of those parties. So there is a massive import of coal that's happened from Indonesia. Now, multiple parties import coals, and India is dependent on coal import. Now, just to give you an idea, a steam coal which is used in the power plants, its value can be determined and fluctuate based on multiple parameters. So, for example, what is the ash content in the coal? What is the sulfur content in the coal? What is its heat generating capacity, or what they use the gross calorific value? What is the moisture content? Now, where would all these reports come from? You would rely on some quality survey. And then by the time the goods are moving from one place to other, coal, it can absorb more moisture if it's moving in, or if it's moving into some of the drier areas, it can lose moisture and the values can change. And that's exactly the case which has been filed in Indian courts, that people have imported coal, they have substituted quality reports, they have made changes to the calorific values or the moisture content, and the price differential between coal having two different moisture content can be as much as 30%, 40%. So by changing just one piece of paper of your quality report, you are able to inflate or deflate the value by 30, 40%. Now, if I'm somebody engaged into a criminal activity, this gives me great opportunity. I can just fiddle around with the papers, I can just tweak around with some of the papers, and I can move large amount of values. The another thing, and you rightly mentioned in the beginning, the organized crime is now today running like a pretty large multinational corporation. Multiple branches, multiple touch points in different jurisdictions. So it's not the goods are moving from one jurisdiction to another jurisdiction directly, or money is moving from one jurisdiction to another jurisdiction directly. The goods could be moving through multiple jurisdictions. So let's say an export merchanting trade, for example, there could be parties involved from India, Singapore, Australia, South Africa. Goods could be moving to Dubai, from Mumbai to Dubai, for all you know. So the where do you go and track, and where do you go and track the value inflation that's taking place in this whole transaction? And just as a bona fide trader would find it very, very useful, so would be a criminal. It's a great opportunity for them to inflate. I can share a particular example. In my previous assignment with Maersk Trade Finance, we used to have a lot of merchanting trade transaction concerning Dubai. Or we would have situation where the consignee is into Dubai, but the technical importer and exporters are sitting in UK or in Scandinavian countries because they were undertaking some projects. So the entire invoicing would happen to company's head office in London or in Scandinavia. But the goods would be delivered into Dubai, the payment would go. Now, how do you keep a track of it? IKEA could be delivering goods in Dubai and you could demand payment coming directly to them in Sweden or Denmark. But the same route could be used by a criminal as well. So which is what I believe, that given the complexity of multiple touch points and the fact that uh, cross-border payments, multiple parties involved in the transaction is an accepted part of trade, global trade, criminals have also found it pretty useful. Over to you.
That confirms to what I keep saying, that banking was never easy and it's not meant for the simpletons like we all think that can handle this. So one question, Charan, somebody has asked over there, since you mentioned about the court cases going on in India. There's a question from Mr. Kalra in
Yeah.
Delhi asking that any bank or institution in India, has it ever been fined for TBML by regulator in India? I know for sure for APEC, I got some numbers. They were, I think, in 2 years back, total fine was something more than 4 billion, and that's the entire APEC data. I don't have. If you have got something about the India specific, anything would you like to share? Whatever is there in the public domain. I'm not saying something which is not in the public domain.
In the public domain, indeed. Yeah, correct. Correct. So I think the very famous case that we all know of, the Pulse Imports advance payment remittance scam that happened at Bank of Baroda in Delhi. Now, this is a particular case where nearly $1 billion was remitted out of the country for the non-existent imports, and this all money had gone as advance against exports. Now, this actually takes me back to what I had mentioned, that sometimes it's a legitimate business money which has been taken out in the garb of trade, international trade. So the intent was negated that you want to take the money out of the country. But when the
That's true.
investigations were carried out, yeah, so when the investigations were carried out, they found that people were also engaged into tax evasion. So the money that was being generated through fictitious invoices, and on those days it was the VAT, the GST was not there. So value-added tax refunds and returns, etc. So the fictitious invoices raised, and money was reclaimed from the government for non-existence transactions, and that was sent out of the country. So that's one case that comes to my mind. But if I can just take a liberty of, when you said why, and I'm just going back to the previous question, so possibly just to contextualize how large the problem is. See, the most recent UNCTAD report that I had gone through, it talks about the global shipping. In the year 2021, which was still a time when we had the COVID running, right? It was rampant. The global shipping handled over 800 million containers. That's 80 crore containers moving globally. Now, those containers that you would have seen moving on the trucks, those 20 feet and 40 feet long containers. And out of these, about 800 million containers, roughly 250 million containers are handled by just 7 ports in China. Now, that just shows how concentrated this whole business is, the global shipping, and how large the movement of goods is. If you don't like these numbers, like 800 million containers, even in the United States, for example, again quoting a WEF report, World Economic Forum report, about 80,000 containers enter US every day. I don't think any authority in the world is capable of doing 100% check. So even if you were to say the bankers cannot check these goods and the documents, to expect law enforcement authorities or the custom authorities to check every single container to make sure that what's coming in or going out is exactly what it has been said or at what value it's coming in is impossible. And that's the sheer size of the problem. If you look at this, the value terms, for example, the global trade is close to $17.5 trillion. That's roughly about 5 times the Indian economy. And even if a small part of that is abused for moving illegitimate money, that runs into a few billion dollars, a few $100 billion. Yeah. So I thought I would just give a context to people of how
that was
critical this
quite
problem
helpful.
could be.
That was quite helpful, and that I moving on to my next question, and there is already a comment from Mr. Praveen Dayal on what my was going to be my next question. He's saying that GFI estimates of the mismatch what we talked about probably represents only the mismatch in the formal trade system. Is there any estimate about the flows through the informal sector or payments against intangible or services? In fact, that is exactly what was my next question, that we are talking about goods import and export. How about the services sector? The risk of money laundering is even more pronounced in case of global trade for the services compared to the goods, because in goods there is something tangible, something physical which is moving out. In case of services, it is very difficult to detect and prove.
Sure.
There are no container movement, there are no goods, nothing tangible. Intangible nature of the services maybe will make it even more difficult, whether there was
True.
any supply, delivery, or provisioning. What is that? So the anomalies in value and prices are even more difficult to detect and notice in case of that. How challenging do you think is that area, and any estimate on that? What is happening in that, and what is the going on situation in the world?
Yeah. So I think with great repetition, I'm daring to answer Praveen's question. He's an expert and a master of this particular area at HSBC. So Praveen, thanks for giving me an opportunity. Services are certainly, as Ashwini has mentioned, it's a black hole. To put it simply, it's a black hole. There's absolutely no way of arriving at a benchmark. At what rate are people valuing these services? And why only services? I would say services is one part, e-commerce, electronic goods, softwares, e-books that you can just download at a click of a button. There is no way one can have a benchmark valuations. And again, if you give me the liberty of answering it, and like throwing some numbers, the global trade in services is over $5.3 trillion. That's again nearly twice the Indian economy. And if, let's say, I'm a lawyer in London or in Jersey and I'm sending an invoice to you that, okay, I rendered services for a potential cross-border M&A transaction, my invoice is $100,000. You have no means of knowing whether it should be $20,000 or $2,000 or $100,000. So there's no benchmark. And so services is a absolute black hole. There's absolutely no control onto that. I mentioned about the software exports. That's another area. At a click of a button, you can download the software and the money can move around. I have subscribed to Microsoft Office, and I pay annual subscription. That's a small amount of money. But just think about it: a company starts supposedly exporting software and running into hundreds of millions of dollars everywhere. Do we have any means of knowing is that software really worth a few $100 million a piece or $100,000 a piece? And so there's a very famous case of an Indian company, and that's in public domain, so I can name the company. Geodesic Software was one company that used to specialize in geospatial, geographical software. It had created multiple subsidiaries globally, and it was supposedly exporting that software from India to Singapore and Hong Kong. Company has gone bankrupt. There are a few thousand crores of bank advances sunk with that. This is an absolute classic example of how services can be so smoothly used, if I can use that word, for rendering the money movements around. And we have no means of knowing it. When I use the word we, whether it is we as bankers or anybody into the technology sector, as to how would you ascribe a value to these. Another example, which again, people who those who are handling the retail retail payment space, they should be concerned about, with no disrespect to Amazon, for example, is the downloading of the Kindle books. Today, just about anybody can write a book and upload it onto the Kindle website. So I can write a book and I can upload it on Kindle. I register myself with Amazon and my book would be available. It can be downloaded globally by anybody. Now, maybe that book is worth $5, $10. A few thousand people globally download that book. Large amount of money has moved to me. That amount is small, under the radar, nobody notices it. And again, FATF and AML GP have actually identified these kind of transactions as potentially supporting terrorist financing. So trade-based terrorist financing, which is another aspect of trade-based money laundering.
So must
So this is
acknowledge
one
that
area. I
I
I,
must
I can
acknowledge
only scare people. Yeah.
that's right. I must acknowledge that normally, like a classic case of when you see a problem, you close your eyes and the problem disappears. And here, when you start discussing it, it's becoming more and more scarier, more and more complicated, complex. The complexity of the trade, multiple touch points, the sheer size of it, and the pressure for the turnaround time. You can't be spending days and months, hours and days to scrutinize and monitor because there's a pressure on the turnaround time also. With all these kind of things, and services is another sector which you mentioned about. It's looking like how in this world is bankers as a banking community, we are going to be better equipped. We are going to be in a better position to minimize that risk, safeguard our interest, the country's interest, the society's interest, and not become a victim for all these things. And somewhere, would you have, now I'm moving, I think the scarier part is over. Let's look at how we can address this thing. I'll need your help on that.
Sure.
What are the checks, the banks, especially the frontline officials who are working, who are facing the client, who are all the time at the firing line, they should implement
Right.
or apply to identify and filter out? I'm saying filter out because practically, as you said, it's not possible to screen and scan every transaction. Filter out the suspicious clients or suspicious transactions. And along with that, I'll also club, there is a comment made by Mr. Bharat Chandela. He's saying that, how do you think, in your opinion, the introduction of EDPMS and IDPMS is helping the banking industry, the banking sector, in monitoring and being more efficient in checking these kind of crimes and the criminal flows?
So let's try to address the first part first, which is how do we as bankers at the front end address the challenge? And I think KYC or client due diligence, know your client, goes without saying. Now, how deep you want to go into that exercise is really critical. And I would really say that we as bankers really need to understand the client as if that person is my family member. And when I use the word family member, then I need to understand everything. What kind of ownership structure does it have? Who are the people controlling that entity? What kind of a product does it deal in? What kind of geographies it is dealing in? What kind of sources of supply does it have? Uh, who are the potential buyers of those goods? Now, if you don't understand the customer's business inside out, it's very easy for us to miss uh, the red flags or red indicators, or potentially not even know that we have become a party to a potential crime. I'm not saying that every businessman is hell bent on abusing the system, but as our experience in industry shows, one error is far too many, and the cost of that error to the banking system is extremely severe. Banks have paid hundreds of millions of dollars, and in cases billions of dollars, because they were not their processes were not up to the mark. So I would really come to those things, and I would personally believe that the relationship team, that's number one, because they are in touch with the customer. They really need to understand the customer very, very well, as if they were a part of the business, or a customer is a part of your family and you would like to know everything about them. The second aspect is about the processing side of it. And though you and I started our banking when possibly banking was also in manual days and everything was done at the branch level, and those days are coming to the processing coming to the branches is not going to come back. I fully recognize that. But I think this separation that has happened between the front end, which is this branches or the relationship team, and the processing teams at the back end through the processing hubs that we have created, it has broken down the information flow between the two critical parts of it. The processing hub's target is turnaround time, how many cases are you able to do it, and then these are large processing shops. Do they have time to understand the full transaction? I doubt very much. So that's one area. Again, because these are large processing shops for the larger banks, and I'm talking particularly about the larger banks, the volumes are humongous. The same person may not be handling the transaction for the same customer over and over again. Ultimately, the documents come into a queue, and whosoever gets that queue attends to that. If a customer's transaction, import, export, payments, whatever it is, it's showing a different behavior. Who would identify that? Will it be a front office person or is it a transaction processing person? But if I'm processing an import transaction, let's say my customer was importing all the time, hypothetically from Singapore, and all of a sudden I find an import happening from Mozambique, how would I come to know that, okay, this is not looking right? Do I have systems which are capable of alerting me in real time and not as a post factor? So this is a challenge that I see at a processing level, and I think we as banking industry really need to have that capability either built up in our systems when we are processing transactions, that these critical information parameters are captured. Coming to the question that you raised about IDPMS, EDPMS, yes, they are great information tools. But let's recognize those tools are created more from the perspective of monitoring at the regulator and the customs level. Like I was talking to my operations team a couple of days back. When you are inputting a transaction in IDPMS, EDPMS, are you inputting what goods are being imported, for example? It doesn't have any such provision. Is there an HSN code? It's not available. So you have the name of the counterparty, you have the name of the importer. So the parties to the transaction are there, but what are they importing? What are they exporting? It's not there. Now, if I download the data from IDPMS, EDPMS, do I have an analytics team in my office who's actually looking at all that information? I think as bankers, we should be looking at that data. But in absence of the goods involved into the transaction, then we won't be able to use the IDPMS, EDPMS data very effectively. And that's my belief that these two systems need to be enhanced to capture these two particular critical informations, or rather three, I would say, which is the HSN code, what commodity, and at what price the transaction has taken place. The reason that I mentioned particularly about the commodity and the price, Ashwini, is again, I'll go back to my experience at Maersk Trade Finance. In the year 2018, that's just about 3.5 years back, the prices of raw cashew which was about 1,000 tons, $1,000 a candy, had fallen to as low as $200 because there was a huge supply that came in from Ghana, Benin, and Vietnam released its old stock. Now, if let's say, even if I was a person in a branch who was regularly monitoring this cash import transactions, my historical trend would show trades happening between $800, $900 or $1,000, and all of a sudden I see a trade at $200. And then again, prices moved back. But just as it would alert me that, okay, there's a sharp movement in prices, the criminal could also use it in the same manner. That maybe he's actually done the trade at $200, but invoicing at $800, $900, backdated invoicing, paid in backdated contracts. So unless you have the trade information, trade history coming in from a customer's perspective, and somebody in the bank is actually analyzing it, at a banker's level, it won't serve much purpose. As I said, this information is available to custom authorities, and possibly DRI is using it very effectively, but then we are out of that particular purview.
So effectively on that, how to build in the checks and balances, what I pick up from your talk is that it has to be supported by the systems and maybe the machine learning and artificial intelligence. That is very critical because the turnaround time, but we are looking at the pace at which we need to do. Humanly, it's going to become more and more difficult with all those kind of things. And EDPMS, IDPMS are more devised for a different purpose, not for the purpose of surveillance from TBML or those money laundering perspective. And if it needs to be used, maybe that capabilities need to be enhanced. Certain more information needs to flow into it. That's very, very relevant. I think that's a very important input. Now, coming to this machine learning and other things also, what we are talking about, but as a human being, the frontline contact, frontline point person, is there, as we discussed about that, there are various ways. It can be false invoicing, it can be the wrong classification of products, as the valuation can differ just by changing one parameter of the product. You gave an example about the steam coal and other things. And similarly, sometimes the entire issue may not be about the mispricing of the product, but it can be only for moving the money, moving the capital for to avoid certain tax violations, or it may fall into those areas, not necessarily the mispricing. So the purpose may be not to actually move the goods, but to actually move the money, something which we call the phantom shippings also, those kind of things.
True.
So is learning by baptism, learning by own mistakes on the job, etc., is one thing which we all are very used to. But is there any guiding material, some guidance notes, or maybe the documents or the literature one can refer to figure out, to see what are the things, what are the checkpoints, besides, of course, the internal guidance note, which I'm sure every bank would be having? Is there something else outside that which you would like to talk about?
Yeah, so I would say I think a very relevant question, and I think and we are fortunate, honestly, that these global regulatory bodies like FATF, Egmont Group, or AMLGP, they've actually come out multiple reports on, particularly on trade-based money laundering. In fact, the very recent report that's been released by AMLGP Group, it has actually case studies. These are actually cases taken from what FIUs in different countries have caught cases, obviously on no name basis, but a basic structure of how the transaction took place has been captured. And I would urge, I'm sure a lot of our friends will be doing it, but those who are not doing it, I would urge them to actually visit the sites of these FATF, Egmont Group, AMLGP. There are multiple reports available there. In fact, there are reports of 2016 when the best practices for trade finance were released by FATF. Then the red indicator, red flag indicator report that has come out. But everything really boils down to how fast are you able to capture the deviant behavior. So we may theoretically know everything about what can cause a trade-based money laundering. But is my system, is my process robust enough to raise an alert at that point of time? I think the technology is going to be the savior for industry, honestly. And there are quite a few people who are actually developing these softwares, SaaS, Refinitiv, and others. I've just heard of a particular company in Singapore, for example, where they have a software which is actually not only monitoring the transaction that's being input, so obviously the usual name screening and other things, but depending on what commodity is going into it, they monitor the prices of that commodity in the real time world. So it's not only as if you're doing a commodity price monitoring, but let's say I'm an importer in India and somebody's exporting goods from Singapore. The system would also track prices of what's for the similar commodity, if it is being supplied out of say Malaysia or in Indonesia, what are the prices there? Maybe is the same commodity available in Dubai? Maybe India and Pakistan don't trade as much. But if India and Pakistan were trading, then it would also track is the same goods available in Pakistan and different at what prices. And if there are price differential, what is the motivation? Now that can become an alert for the system as to why an Indian importer is importing from Singapore at X price, whereas just a few kilometers away at Port Klang, the same goods are available at X minus something. And that's the kind of capabilities that industry is building upon. I think banking industry, and then banking industry is obviously the main customer and target for these IT developers. So yes, the resources available from these global bodies. Some of the consulting companies keep coming out with the white papers. And those who are fond of reading books, for example, there's a very famous book by a well-known TBML expert called John Cassara, who has written a book. He's an ex uh, Department of Justice employee who used to monitor the money laundering activities in the United States. He's come out with a very good book. So it's called Trade-Based Money Laundering Trends and Developments. So that could be a good reference tool for people.
That's helpful. But most of these things they give us that intelligence and the knowledge post facto by the time the horse has already bolted. But one thing more which I keep hearing, don't know, you have not mentioned about that. We very often have heard about that original 40 recommendations by FATF. What is
Correct.
what's that? Is it something relevant even today? Though that's something which started maybe 3 decades back. Is it really relevant even today for the bankers? Something which is of value, or is it being updated with the changing environment?
So yes, 1990 is when the 40 recommendations had come out for the first time round, and the FATF recommendations have continued to evolve with the time. They remain absolutely relevant even today. So when they talk about countries should have a legislative system, or countries should have penal system, countries should have risk-based approach. So all these are there, and which is what banks globally are adopting it. What I've noticed is that the evolution of these recommendations is getting reflected into the peer evaluation that FATF carries out periodically for different countries. And that, so these 40 recommendations and then the 9 special recommendations which came for combating the terrorist financing, I think those are permanent markers, is what I would use the word. They are the permanent markers for banking industry to fight the financial crime. The continuous evolution will happen. So maybe if you were to look at 1990 guidelines, you won't find any reference to the cryptos, for example. Why
Yes,
1990? Even 5 years back, you will not find cryptos anywhere. But today's recommendations and discussion papers are full of references to cryptos.
that's
So it's a
that's
continuous evolution that's taking place, and I would say, not pleasantly surprised, but I think it's really inspired as to how effectively and efficiently that gets translated into their research papers and then the communication to the industry. And as I said, when the peer evaluation is carried out for individual country, and I think India is subjected to a peer evaluation next year, if I'm not wrong.
I think
Uh,
it was supposed to happen 2 years, 3 years back and getting postponed
Yeah,
because of
because of
COVID.
the COVID, it got delayed.
Right.
So these new developments, new learnings get translated as part of the evaluation exercise, which then translates into the regulations or the directions that the central banking authorities or the monetary authorities might give to bank. So yes, I think those 40 plus 9, as I call it right now, it will remain a permanent marker with a continuous evolution.
Okay. That brings me to one more comment from one of the member banks. I think we'll take this as a last thing before we wind up. You mentioned about the cryptocurrency. Ranjita Venugopal has mentioned about that with the new age products, cryptocurrencies, digital rupees, and new asset management companies and blockchain technology. How is it going to affect the product offering in the trade finance world? And with the blockchain settlements, it's with the settlements are happening in the real time. And we were talking about the turnaround time and the time to process, time to scan, screen. Here we are
Yeah.
moving into the real time settlements where and how are banks going to come up to live up to these challenges now when you have got really no time? It's entirely totally dependent on the system and how technology is helping to monitor and check those kind of risks. It is helping to expedite the process, the settlement. Is there equally on the balancing side, the other controls are also being built in? How is it going to be change the scenario in the trade world?
I think you answered the question yourself, question. So when it comes to the pace of settlement and pace of transaction, there's absolutely no doubt about it. The technology is a great facilitator. The blockchain technology or DLT technology, as we call it, it's a great facilitator. But with speed comes the risk. Now, the control mechanism that you can do it today, either manually or through whichever in the current environment, most of the banks are not on DLT list. And I don't see the industry would, the trade finance would move to DLT in any near future. And where my cynicism comes is from the fact that what you are expediting is just the document acceptance. The goods have still not left my shores. Until the custom releases those goods, just because you have accepted the document, has not really made any material change to the real life. It will become a great tool for settlement and certainly in certain industries like security trading, for example, or FX trading. But whether it will become a great tool for trade finance, uh, jury is still out. I would put it this way. And as you rightly said, while the process would get expedited, what happens to the controls? And that is a risk I think very few banks would be willing to take, given the cost of failure or a cost of penalty that comes should a bank be found guilty of abetting or not having looked at the KYC, AML, sanction, TBML issues. I know I would possibly be forming a minority of people who still hold the old view, but happy to be proven wrong there.
I think in the recent episodes in the market with the cryptocurrency craze and then the price going up to 65 and crashing down to 15, I think it's no harm in saying that slow and steady is better rather than just rushing into the things or trying to move into the new word so quickly. It's better you take your time and think. And I think it's helpful when you say that for the trade word, because of certain intricacies or its own complexities of it, maybe the digital ledger technology or the blockchain may take some time before it gets adopted. Though the trade may become documentation and other things may get digitized, but the actual flow of the goods is going to be something unless you go into that 3D printing and other things. That's a topic for some other time.
Yes.
Yeah. With that, Charan, we come to the end of our time, and I must acknowledge that this was really interesting, and the perspective and the different aspects you brought into it. It was, at least I enjoyed it very much, and I hope my other fellow colleagues who have there in the call also would have really benefited out of it. And thanks a lot for sparing time joining us today, and thank you all the participants also for joining us. And I hope that you got benefit from this and look forward to having more such engaging discussions on different topics. And we continue with this. Wish you all the best. Stay safe. Take care. Thank you, Charan. Thanks a lot.
Thank you, Ashwini. Thank you very much for giving me an opportunity to engage with a wider group. And thank you, everyone, for bearing with me, is what I would say. And have a great day ahead. Cheers. Bye bye.
Thank you. Bye bye.